Last week, we looked at some Canadian hold forever stocks. This week, it is America's turn. Hold onto your seatbelts, folks. This is going to be a good one. The cornerstone of long-term investing is making the right picks that will put some really good stocks into your portfolio that will prove the test of time. These are the solid blue chip stocks that will produce long-term and make up for the losers that we will all, of course, pick along the way. These circle the wagon stocks are a key to long-term investing success. This time around, we are looking at American stocks, so we do need to address withholding taxes. The main account you can hold American dividend stocks in without paying any withholding taxes is your RRSP. You will receive 100% of your dividends with no muss or fuss. LIRAs, or locked-in retirement accounts, are also exempt from withholding taxes. In your TFSA, U.S. dividends are subject to withholding taxes with no recourse to recover them, so that 15% deducted is gone forever. If you do hold them outside of a registered account, you will also pay 15% withholding tax, but some of that tax may be recoverable at tax time. Personally, I will put a U.S. stock with smaller dividends in my TFSA, as the loss is pretty negligible. But if the stock has better dividends, then it definitely goes in my RRSP. I do hold two of today's list, one in my TFSA and the other in my RRSP. Guess which one has the smaller dividend yield? Join the conversation. Let us know in the comments if you hold any U.S. hold forever stocks. Your participation is well appreciated, and don't forget to like and subscribe to stay up to date on future content, and of course a huge thank you for that click. The same as the Canadian version of the list, I have ranked them by return on equity, and all of these stocks have some dividends, though the overall idea is a total return strategy. So without any further ado, let's just get into these stocks. Kicking off this list, we have Johnson & Johnson with a ticker of J&J. They are based out of New Brunswick, New Jersey, and they are a developer of medical devices, pharmaceuticals, and consumer packaged goods. I'll be willing to bet most of you have one of their products in your home right now. Their market cap comes in at $448.30 billion. They have a less than half as volatile as the market beta of 0.54. Their earnings per share comes in at 4.93, and they have a price to earnings ratio of 47.40. Their return on equity, the lowest in the list today, comes in at 12.59%, and their debt to equity ratio, so giving us an idea of what their debt might look like, comes in at 59.68%. That's not too bad. When we look at their dividend yield, that comes in at 2.76%. It is paid out quarterly in the amount of $1.19 USD per share. They have a pretty high payout ratio of 92.90%. Getting to their returns, their 3-year return on investment, that comes in at 12.74%. Add in those dividends, we get a total return of 21.22%. When we look at their 1-year return on investment, that comes in at 3.29%. Add in the dividends, we get 6.03%. And of course, for 2023, their ROI, it comes in, well, it is in the negative 2.08%. Adding in the dividends, we get a total return of negative 0.77%. Out of today's list, Johnson & Johnson has one of the nicer looking 10-year charts, and it is easy to see how they made this list. Coming in at number 4, we have Procter & Gamble with a ticker of PG. They are based out of Cincinnati, Ohio, and they are one of the world's largest consumer product manufacturers, selling some of the biggest recognizable product brands such as Tide laundry detergent, Pampers, and Gillette. Their market cap comes in at $359.58 billion, and they have a nice looking 0.42 beta. Their earnings per share come in at 5.90, and they have a price to earnings ratio of 24.50. Their return on equity, that comes in at 24.93%, and their debt to equity ratio comes in at, once again, not a bad looking 75.27%. When we look at their dividend yield, that comes in at 2.467%. That is paid out quarterly in the amount of 94.1 cents USD per share. Their payout ratio comes in at 62.38%, so this is pretty sustainable for sure. Looking at that 3-year return on investment, we get 10.38%. Adding in the dividends, that gives us a total return of 18.05%. On their 1-year return on investment, we get 2.77%. Add in the dividends, that takes us to 5.27% for the total return. Now, this year in 2023, their return on investment comes in at 1.05%. Add in the dividends, and we do get 2.90%. We are, of course, going to zoom out and take a look at their 10-year. And you can see that their overall trend is to the upside. And this is exactly what we want to see in a hold forever stock. In at number 3, we have Microsoft with a ticker of MSFT. They are based out of Redmond, Washington, and they are a massive technology company, most known for Windows and Office products. They have a market cap of $2.35 trillion, and their beta is pretty average at 0.90. Their earnings per share come in at 9.68, and they have a price to earnings ratio of 32.50. Their return on equity, that comes in at 38.82%, and they have a really nice looking debt to equity ratio at 38.52%. When it comes to their dividend yield, you will find this is the lowest on the list today at 0.859%. That is paid out quarterly in the amount of 68 cents USD per share. Nice small payout ratio of 27.48%. Looking at their return on investment, on the 3-year, it came in at 53.10%. Factor in the dividends, we get 56.62%. When we look at their 1-year return on investment, that comes in at 14.48%. The dividends take it all the way up to 15.45% for the total return. And this year in 2023, partially thanks to the AI craze, their return on investment is all the way up to 30.20%. Adding in the dividend, we get a total return of 30.76%. With Microsoft, it should be no surprise how nice their zoom out to the 10-year chart looks. This one should be, well, a no-brainer. In our almost top spot at number 2, we have Coca-Cola with a ticker of KO. They are based out of Atlanta, Georgia, and they are the biggest non-alcoholic beverage company in, well, the world. They have a market cap that comes in at $263.58 billion. They have a very nice looking 0.54 beta, and their earnings per share come in at 2.42. They have a price to earning ratio of 24.90, and their return on equity comes in at a nice looking 41.87%. Their debt to equity ratio, a little bit higher, highest on the list today, 156.78%. This is one I don't like to see, but this is a company that I have 100% faith in, so I'm not too concerned with that number. Their yield comes in at 3.019%, and their dividend is paid out quarterly in the amount of 46 cents USD per share. Their payout ratio comes in at 74.69%. Looking at their return, so their 3-year return on investment comes in at 22.39%. Add in the dividends, we get a total return of 32.79%. When we look at their 1-year return on investment, that comes in at negative 4.50%. Adding in the dividends, we do get a total return of negative 1.68%. When we look at 2023, a little bit down this year, negative 4.11% for the return on investment. Add in those dividends, we get negatives 2.66%. When we zoom out, we get a pretty nice looking 10-year that leaves little doubt to where this stock's future is heading. In our top spot at number 1, we have Texas Instruments Incorporated with a ticker of TXN. They are based out of Dallas, Texas, and they are a manufacturer of semiconductors as well as a certain line of calculators. The semiconductors actually make up about 95% of their revenue. They have a market cap of $151.17 billion and a very average beta of 1.01. Their earnings per share come in at 8.33, and they have a price to earnings ratio of 19.70. Their return on equity, a nice looking 50.95%, and their debt to equity ratio comes in at 70.38%. They have a dividend yield of 2.979%. That is paid out quarterly in the amount of $1.24 USD per share, and their payout ratio comes in at 58.46%. When we look at their 3-year return on investment, that comes in at 18.20%. Factor in those dividends, we get a total return of 27.88%. Their 1-year return on investment, that comes in at negative 2.26%. Adding in those dividends, we do get a total return of 0.65%. And for 2023 so far, their return on investment, it does come in at negative 0.44%. Factor in the dividends, we do get a total return of 1.79%. This is another great company, and zooming out, they have a great looking 10-year. The demand for semiconductors should keep the stock on an upward trajectory. These are some great stocks, and let me tell you, there are many more that I could have chosen for this list. The US is the biggest market in the world, and that shows when you go hunting for US stocks. Of course, if you love a stock or a few of them from today's list, still be sure to drop a heaping pile of due diligence before you throw any of your hard-earned cash on the table. When we look at their 1-year return on investment, we have sheep. Sheep are attacking. Keep the learning going. Watch my video on pizza or test YouTube's recommendation skills by checking out the video on the right. Your choice will decide the winner, and I will see you in the next video.